Hello, everyone. Today I'm talking about why Costco Wholesale Corporation, or COST, is part of my portfolio as a long term investment. Even though it is down from its high, it does have a proven track record with strong financials and an excellent business model. Unlike most retailers, Costco operates on a membership based model, which means customers pay for the privilege of shopping there. This creates a strong recurring revenue stream. In fact, the membership fees account for a significant portion of Costco's profits. With more than 77 million paid memberships worldwide, Costco benefits from the predictability income which supports the company's growth. Since Costco has some of the highest membership renewal rates in the industry, this loyalty translates directly into sustainable revenue and growth, offering a strong investor confidence. Costco's financial performance is consistently strong. Even though the stock is down for the month, it is up over 5% since the beginning of the year. It is also up 22.75% for the last 12 months and is up almost 9,000% since its inception date. Despite economic challenges, Costco has remained a market leader. With impressive revenue growth and solid profit margins, Costco has consistently outperformed many of its competitors. If you are enjoying my videos and content, please click on that like, hit the subscribe button, and leave a comment. Costco has had an outstanding dividend growth. For the last 10 years, it has averaged almost 12.45% dividend growth every year. As you can see, for the last four dividend payments were $1.16. It was $1.02 the previous year. And we even had a special dividend of $15 at December 27, 2023. And we also had a special dividend of 2020. Costco averages special dividend about every 3 years. My final thoughts are that Costco represents a compelling investment opportunity for those looking for stability, consistent growth, and long term returns. If you're looking for a solid, reliable company to add to your portfolio, I think Costco is definitely worth considering.